Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey folks, welcome back. Today we have a special guest zooming in who is not only a very successful multifamily real estate investor, he's also a very accomplished fellow podcast host. So Todd Dexheimer, welcome to the show. Great to have you.
Yeah, well, appreciate you, Dave, having me on the show. Looking forward to it.
Todd, tell us a little bit about what you guys invest in, what you focus on, what's your buy box, so to speak.
Yeah, our bread and butter is value add multifamily. We're looking for 100 plus unit multifamily, although we dabble in some smaller stuff too at times, but really 100 plus unit multifamily. We also have some assisted living, a little bit of retail industrial, but bread and butter's value add multifamily.
Very good. And how long have you been involved in the company? What does the portfolio kind of consist of as of June 2026?
Yeah. So we have roughly 3,000 units of multifamily and assisted living. Like I said, a little bit of industrial, a little bit of retail. Been doing real estate for 18 years now, and really transitioned into the larger multifamily. What's it been? 8 years? 9 years? 9 years? No, geez, longer than that. 10 years.
Time
flies, man. Yeah, so 10 years I've been doing the larger multifamily game. So before that, I was doing a fix and flipper and buying smaller single family duplexes, quads, stuff like that.
All right. So it sounds like you got into multifamily kind of as things were really ramping up. You got to ride that wave. Now some might say we're on the other side of the wave. What's been your experience throughout this whole cycle, and what does your crystal ball tell you?
Well, I don't know that I got a crystal ball, but
I got one, but it's pretty damn cracked.
Yeah, I shake mine and it says different things. It's been an interesting ride, Dave. I mean, look, it like you said, you rode this wave up. I mean, 2016 all the way through 2022 was a big ride up. Very little downs during that time. It was almost straight up. And so a lot of people could basically buy a property and 12 to 18 months later, sell the thing and make really good returns. And they didn't have to know what they were doing. If they just bought it and kind of looked at it, it increased in value, right? They just didn't, unless they messed things up, you couldn't miss in most areas. And especially, we weren't in kind of I think the epicenter of it, but the South and Southeast, we weren't in those locations, but in those locations specifically. I mean, I know somebody who bought a property and 9 months later, they sold it for almost double what they bought it for. Wow. And it's just like, you look like a genius, right?
Go times. Yep.
Yeah. And that time's over. 2022, as most people know, interest rates skyrocketed more than anybody ever imagined. I think the Fed was saying, we'll expect rates to go up by about 75 bips. So you're talking like 0.75%. That didn't happen, right? It went up by 500 bips. So totally different. And it completely turned the market, all of commercial real estate, completely turned it upside down. And now we're, different story. So it's been a interesting ride. And I think it's going to be an interesting next 10 years, quite frankly.
Yeah. So we were talking a little bit off camera that you foresee this being like a decade long, I don't know if doldrums would be the right term, but basically where you're saying being a good operator is more important than ever nowadays. So tell me a little bit about your thoughts there.
Yeah. I don't want to say doldrum. I think it's good times, but it's times where I think, so look, I mean, look at the facts. We've got inflation. We've got unemployment, although we're still holding pretty strong, but AI and blah, 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 and who knows where that things go. We've got the war in Iran. Who knows how long that goes? You got Ukraine still. You know, there's just stuff. And there's always stuff, by the way. Today is no different than any other time in history. There's always something weird going on, it feels like. But I just think with what's happening today, we're going to need, as apartment owners, you're going to need to be extremely good at operations to make good money. And quite frankly, Dave, like, this is the facts in the vast majority of the market cycles that we have, is the operators win. The people that are speculative, that are chasing equity, typically don't win. They win at times, and they won over the last, especially 5 years, all leading up to 2022. They won big time, but that's not how it usually goes. And I think that's where we're at. In my opinion, you have to be
kind of get back to normal. Then is what I'm hearing you say.
Yeah. Back to normal. Maybe a little bit less than normal, depending on what market you're in. People talk about the southeast. No, they're not building as much. The building's going down. Well, guess what? They're still building a lot. It's just less than what the huge run up was. They're still building quite a bit. And I don't want to sit here and say it's doomsday, but a lot of those markets are going to see negative rents for probably at least 12 to 24 months still. And that's just how it is. And you have to be a good operator if you want to make it through.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So what have you guys taken from this whole experience that you're now applying to the portfolio?
Not to beat a dead horse, but strong operations is what's going to win. And so when we look at our portfolio and we look at, there are several things actually. So strong operations, let's focus on that right now. So that's going to win. When we look at our portfolio, we brought everything in-house in 2024, and 2025. And we were able to raise the NOI by 44%. We raised the average occupancy by about 6%. And we did that through sound management, expense control. Those weren't being done. And our portfolio, Dave, was actually running okay, right? It was fine, but it's like, status quo just doesn't work anymore. Like, we weren't satisfied with underperforming properties, even if they were just like, I mean, they're not bad, are they? Everybody else is complaining about how bad theirs are, and ours are doing better than them. Well, no, that's not how we need to be looking at things. And so we did focus on how can we become better. I think the other thing alongside that is you have to set yourself up for win long-term. So that is how you finance your properties. You've got to be really thoughtful on how you finance your properties. And we've seen a lot of people get burned with floating rate debt and, just the wrong loan product for the property. So I think that's really, really important as well.
So are you guys still focusing on finding value add multifamily properties right now? If so, how's the market looking with things kind of shaking out with some operators who haven't fared so well? What are you seeing these days on the ground?
Yeah. So first of all, we're Midwest, so we don't see a lot of what a big portion of the country is seeing as far as distress goes. Our rents have been going up every year. We haven't seen negative rent growth at all. In fact, we've seen really strong rent growth, 3% rent growth every year. So we're a little bit different, but there is some distress. Certainly, there's some people that got bad mortgages. Certainly. How does that play into our strategy? I mean, we're still value add investors, but we don't see really great opportunities in like buying a bank owned or anything like that. So value add, I still think it's there, at least in our markets. But you got to be a little bit smarter today. I think you got to really understand your demographic, what people are really looking for, and really have a thoughtful value add. What are we truly doing on the construction aspect, and does that meet the market? Where before, I think it just didn't matter what you did. You throw some money at the property.
What would be an example of a recent property that you guys have been working on where you've really analyzed that and done things differently?
Yeah, I mean, we've got a couple townhome properties that we have bought, and one of them, we're just like focusing on some of the basic interior improvements, and we look at the market and what's going on, what the market demands are, who else is renovating the market, and we saw what they were doing, and we literally copied them. And it's just the basics. It's kitchens, it's baths. It's not doing any extra crazy amenities. It's just focusing on the simple stuff, nothing fancy and flashy. And we're getting like $450 rent bumps for doing something like that. Right. We've got another, huge difference. Right. We got another property. Really, again, like that one, we're not doing quite as much of a renovations, but a lot of the same stuff, just toned back, right? And because we looked at where the market was and what the opportunity was. Now, in a different cycle, we maybe would have went a little deeper on that renovation, but today it just doesn't make sense. So,
okay, no, that makes that's logical for sure. So, Todd, in today's market, are you guys still raising capital, connecting with investors? And if so, have you seen some changes on the investor side of things?
Lots of change. Investors are, yes, to answer your question, yes, we're still raising money. On these last, several deals we've done, we've closed, what was it, 5 deals in 2024 and 2025. We actually have yet to close a deal in 2026. We're hoping to find something, but the market's a little tight right now. But you look, raising capital is different. Investors are not just throwing money at everything. They're cautious. They're thoughtful. They're asking questions. You need to make phone calls, text messages, emails, which is good. I think this is all good. It's healthy. Previously, we could put an offering out, and within 2 days, we'd raise $10 million, and I wouldn't make a phone call. The only thing I would do is host a webinar, send an email out, and it would fill up. And I'd check the portal, and all of a sudden we're at $10 million and we're closed, right? Now today, I'm emailing, I'm calling, I'm setting up meetings, I'm meeting people for coffee, and those are healthy things. And I think that's great. So investors are still out there. They're still looking to invest in good deals, but they're much more analytical and cautious.
Well, fair enough, I guess, right? Quite a few of
they
them
should be.
Got burned in the last cycle, so
got spoiled. Yeah, I mean, I've got investors that have lost a lot of money on deals, on other people's deals, and they're cautious, and so of course capital calls and all that kind of stuff.
Yeah. So you've been running your podcast for quite some time now, Todd. Where does that fit into your business model? Tell us a little bit about your show.
Yeah, so I've been running my podcast, Pillars of Wealth Creation, for since 2017. Wow. I've got nearly 900 episodes. It's been a lot of fun. I've learned a ton of stuff, as I'm sure you do all the time. You meet great people, learn a lot. How does it work into my business? It's a great, essentially, referral source for investors. People that are interested in investing with us have an opportunity to come and hear what I have to say. And I have my business partners on sometimes too. And so they get to know me and my business partners and my company and my philosophy. I think that's really valuable. And of course, they get to learn a lot of other great information. And not everybody is an investor that listens, certainly, right. which is great. I want to be out there helping people. It's allowed me opportunities to get on to great podcasts like yours. It's allowed me opportunity to get onto stages, and meet other people. And quite frankly, my business partners, I would never have met if it wasn't for my podcast. So yeah, it's just allowed a lot of great opportunity.
Oh, that's wonderful. That's wonderful, Todd. So as we're wrapping things up, where do you see you taking the company over the next 12 to 24 months? What do you guys have on the horizon?
Yeah, I mean, we're laser focused on finding good opportunities that, again, have a good value add story that we can, execute with sound management, long-term assets. We're looking at other ways to bring more in-house, and that includes project management, the construction aspect of it, more of that in-house, and really just different ways to improve just efficiency in the company. So continuing to better ourselves in our property management, make things more efficient, and really improve the overall operations of the business.
Very cool. And who are you looking to connect with these days, Todd?
Boy, I mean, look, investors, certainly, if anybody's looking for different ways to passively invest, I would love to have a conversation. And obviously anybody that, look, I love teaching people. I love talking to people. So anybody that's interested in learning, those types of peoples, or if you got opportunities, business opportunities, mostly properties, right? Value add opportunities. We're looking for.
So do you work with co-GPs on deals?
We do.
Well?
We do.
Okay.
We want to control operations. So, but we would look at a JV partnership with people, or if somebody likes to raise capital and is a fund of funds, certainly we would speak with them and see if it's a good fit.
Okay, very good. Excellent, Todd. So if people want to reach out with you, where's the best place for them to do that?
Yeah, I think the best place would be our website, enduruscapital.com. So it's ENDURUS capital.com. There they can find my podcast, Pillars of Wealth Creation. They can connect with me. They can, find me on LinkedIn and so on. So
fantastic. Hey, Todd, this has been great. Thanks so much for coming on the show.
Yeah, really appreciate you having me on, and have a fantastic rest of the day.
All right, everybody. Thanks for tuning in, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.